The first interest rate cut of 2025 is in the books. The Federal Reserve pointed to the softening job market as one reason for the move. What are strategists telling you as the market awaits the Fed's next move?
Yeah, so we had our first rate cut in a full year a few weeks ago at the Fed September meeting. That cut was not a surprise to anyone. It was well priced into the market. Everybody kind of knew it was coming. Even though inflation is still, as we mentioned, like a little bit higher than the Fed would prefer, we had a few months showing kind of increasing weakness in the labor market, and that was enough for central bankers to loosen policy a little bit. But the most interesting part, more interesting than the cut, I think, of the meeting a few weeks ago, was the projections that we got from members of the Fed committee. These come out quarterly. It contains, a collection of expectations for inflation, the labor market, interest rates going forward. And this time around, there was a really, really wide range of forecasts, which is kind of unusual. And it tells us that Fed officials don't see one clear path for policy or the economy. And that's something that they're going to have to juggle in the months ahead. At the same time, they have this kind of undercurrent of political pressure and kind of heightened scrutiny that's making things even more complicated. As far as the next couple months, I think we're pretty confident that we'll have one or two more cuts this year, depending. But the picture moving into 2026 is a little bit less clear, and I think it will really depend on the path of the economy.